Guys, so where I want to pick up from where we left off in the last video is talking about refunds and allowances. And so in the prior video, we talked about, sometimes a customer will ask for a refund and we're going to provide that with them, right? That's just part of doing business, that sometimes we're going to sell something to customers and they're going to say, hey, it doesn't meet what I was looking for. I want a refund. And then this is how we record that transaction. Now from here, what I want to do is go on to the next slide and talk about if I decide not to give a cash refund, what other options do businesses usually exercise? So a refund or allowance can be applied to an outstanding accounts receivable balance. So we can do a credit memo. So what account is the seller crediting? If they are doing a credit memo, it would be accounts receivable. So let's, well, before I read through this example, what I want to make sure I drive home, or the point that I want to drive home, is sometimes businesses deal with two types of customers, right? There's two types of customers. The first customer is transactional. And what transactional customers mean is sometimes you do a one-time type of deal with them, right? So maybe they'll come to you because they need something, or only once in a while, right? So maybe it's not ongoing or steady business, right? So maybe they only buy from you once a month or twice a year, or something of that nature. Then the second type of customer you have is those ongoing relationships, right? Where maybe they have already set up some kind of account with you, or you have granted them some kind of credit, and you guys are constantly, selling to each other, and you're constantly selling to this particular customer. Again, you have an ongoing relationship with them. And so this is what I want to kind of get to right now, is that ongoing relationship with that particular customer. Now, when you have a transactional customer, again, they only buy from you one time a year, maybe, right? Whenever they need a refund, you usually give them a cash refund, right? It's a one-time thing. But for those ongoing customers, you're going to probably sell to them more than one time a month, a year, so forth and so on. So at this point, it makes no sense to do a cash refund, because next week they're just going to place another order. And we know that usually when you provide cash refunds, it has to go to accounts payable. Accounts payable has to cut the check, put it in the mail, or do a wire transfer and send it out. That probably takes, I don't know, anywhere to maybe 5 to 6 business days, right? But if this is an ongoing customer, if they're going to order from me next week, it makes no sense to go through this process. So instead, what we'll do is just go ahead and reduce what they owe to us on their account. So I'm just going to give them a credit on their account, and then next week when they order, it's going to deduct from what they currently owe, right? So it takes less out of, we're taking the cash out of the situation, right? So we're still providing them with a refund, except it's not a cash refund. We're refunding what, we're reducing what they owe to us. So what that looks like is, instead of having a cash refund here, instead of having cash, right, we're now going to have accounts receivable. So for example, assume instead of paying a cash refund to Blake & Sons, Net Solutions granted Blake & Sons a customer allowance of $900. This is also we can also say that this is maybe something along the lines of store credit, right? A gift card, a store credit, right? That's the same thing. And Net Solution notifies Blake & Sons that allowance by issuing the credit memo. So this is what it would look like, okay? All right, so moving on. So let's take for a second to see if we can work through this example, Okay, so as always, I'm going to switch applications to make this a little bit better to write on. So I have a little more space. All right. All right, so here we are. It is asking us to journalize each of these transactions, okay? All right, so on January 1st, we sold merchandise on account 92,500 with terms 110 net 30, and a cost of goods sold was 55,500. Now remember, whenever you're reading through these transactions, try to remember what hat you're wearing when you're processing these transactions. So right now you're in the seller seat. You've already purchased this inventory, now you're selling it. All right, so if we sold this on account, which means we're receiving an accounts receivable. And so we're gonna always assume that the customer will take the discount. So therefore, our calculation to do this is gonna be 92,500. And then the customer is responsible for 99% of the invoice. Now, if we did that calculation, 92,500 times 99%, that comes out to 91,575. That is what the customer will owe us if they paid within the credit terms, 91,575. Okay, and my credit is going to be sales, which is 91,575. And then we have this other piece of information. It tells us about our cost of goods sold. So therefore, we're going to do a debit to cost of goods sold in the amount of 55,500. And my credit is going to be to inventory. My inventory is decreasing. Okay. All right. So now on January 6th, what happens is we receive payment less the discount. So the customer paid within the 10 days. In fact, they paid earlier than the 10 days. And now the way we're going to record this transaction from the customer, receiving the money from the customer, is our cash is increasing by the 91,575. And then my credit will be accounts receivable. They are satisfying their obligation to us. Okay, so hopefully that all made sense. And now what we're going to do is we're going to do the next transaction, which is on January 7th. All right, so on 1/7, we refunded $750 to the customer for defective merchandise that was not returned. Now that's very key, because as we walk through the rest of these examples, the customer may return the inventory and ask for a refund. All right, so we're going to assume that as it's stated, that the merchandise was not returned. All right, so in order to process this transaction, we're going to do a debit to customer refund payable in the amount of $750. And then my credit is going to be to cash. Yeah. $750. Now, maybe some of you will say, well, why didn't we apply a discount to this one, right? Well, in this particular example, it says, hey, the seller, us, we just refunded them $750. So make sure you go with that idea. So it's a little bit different from what we've seen on the purchasing side, where we were returning stuff with a discount. But in this particular instance, when they said that the seller refunded $750, we refunded the full $750, okay, cash, no discount included or anything like that. Okay, so hopefully that all made sense to you. If you have any questions, as always, just let me know. Other than that, we're going to, in the next slides, we're going to talk about something else.